I'm Shae Russell from mining.com.au, and I'm coming to you once again from the Noosa Mining Conference. And next to me is a gentleman who has recently joined mining.com.au, Dan Petrie, although we all call him Data Dan. Data Dan, welcome aboard. How are you?
I'm well on a very, very brisk, somewhat cold morning here in Noosa.
It was not meant to be like this.
No.
I came up here for warmth, and this is what I've got. Now, I'd love to sit here and bitch and moan about the weather because I am from Melbourne. It's what we do for a profession. But we've got more important things to talk about. Now, look, this conference is about to get underway. Like, it looks a little busy now, but it's about to really kick off. Tell me, in your walk around since you first got here, have you picked up any common themes among the exhibitors?
Well, look, there's still a very bullish market out there, particularly for minerals. And this is also comes at the time of the geopolitical space, where the Americans have said that they want to do more in the critical mineral space. So that data is starting to flow through in some of the pricing data we're seeing, not just for base metals, but also for these critical minerals we're talking about. And that's obviously going to be a key feature of what we see here today.
Yeah, it certainly is. Also, too, how do you feel that, is there optimism out there? Because it's been a tough time for explorers. We're seeing a lot of private equity deals happen and institutional companies take hold, but retail investors shying away. Do you think that's about to turn by any chance?
Well, investors will always go, people tend to, they buy on the rumour.
Buy the rumour, sell the news.
Exactly, but one of the things which we need to start seeing really from a lot of these juniors is, particularly the explorers, what are their drill results like? What's their pathway to production? What are the overseas orders looking like? What are the stockpiles looking like? And so that story in Asia particularly is very, very strong in terms of what the forward orders are, but we actually need to see that coming through in the numbers.
Yep.
And at the moment, for example, people tend to, it's a wait and see approach, and also given the political environment, that's a problem.
Yeah, it certainly is. And obviously offtake deals are critical for a lot of these juniors being able to secure funding. But to put your data lens on this, what are some key numbers you're watching right now?
Well, obviously, I tend to look at the big kind of numbers around iron ore. That kind of is a leading indicator in some ways because it gives an insight to what industrial production is. In terms of those volumes, those traditional big stalwarts, if you like, are still very, very strong. They're quite elevated. And then, of course, you've got the copper outflows that are very, very strong in terms of the volumes of copper leaving Australia. So those things associated with the critical minerals we were just discussing are still elevated, and that story is very, very strong. And so with that, one would say that in the next coming year, you'd expect those numbers to remain elevated. And again, that augurs for positivity in the near term.
Actually, it's an interesting point you've just risen, and now we're going to take this interview a place I didn't think we were going. But there is obviously a lot of bearish sentiment on China, slowing GDP, but let's point it out, 4.7% is still fantastic. It's just slowing for China. But you're talking about large iron ore shipments and still a large amount of copper leaving the country. That tells me that demand is still strong. It's just not as strong as we've become accustomed to. Do you agree with this?
Yeah, absolutely. But the other thing too is that demand's strong from China, but it's also going to increase from the Americas because they've got a play at the moment where they want to take a lot of their own production onshore. They don't want to be reliant on China. Now, this is specifically in the case of the battery minerals.
Yes.
They specifically want a presence around the rare earths. And it's not just because of geopolitical tension and assertiveness in the South China Sea, I should say, but we are seeing a fact where countries are now identifying this as a critical need to be able to take some ownership of what they produce. And so as a result of that, you'd expect the demand dynamic to change somewhat, but actually be a near-term positive for producers.
So taking it back to our critical minerals conversation we started with, do you see any critical minerals being more favoured over the other? Is it market dependent, or is there just one or two minerals that our neighbours are most wanting?
Well, they don't tend to kind of be in one lot, if you know what I mean. It's almost like if you need one, you need many. And so it's kind of, they do get lumped in a lot because of that very reason. So at the moment, I'm reluctant to say lithium or vanadium, which tends to become the new hot metal.
Yeah.
So at the moment, it's really a bit of a wait and see, but in the critical mineral space, it's the basket we're talking about. Not like CPI, but certainly if it's got a price flow like CPI, that's a good thing for those who are invested. But by and large, we are talking about the bucket at the moment. That's really quite where it's at.
So it's not just one mineral, it's all of them that are really people are after.
Exactly, the complementary story, do you know what I mean? So there we are.
Listen, Dan, it was great to meet you in person finally. Welcome aboard to mining.com.au, and thanks so much for sharing your insights. I hope we get to do this more often.
Pleasure.